Ladies and gentlemen, Assalamu alaikum and good morning. Thank you very much for being with us today, and welcome to what promises to be a very, very interesting session on some of the key trends and challenges that are facing the Islamic finance industry today. My name is Mustafa Adil. I'm the head of Islamic Finance for Refinitiv, and I have the unique pleasure of discussing many of these issues with one of the key thought leaders within the Islamic finance industry, Mr. Shamzani Hussain, the head of FAB Siraj, which is the Islamic finance practice and franchise for First Abu Dhabi Bank. Mr. Shamzani, thank you very much for being here with us today.
Thank you, Mustafa.
I want to jump straight into this conversation, right? And I want to start with something that, the Islamic finance industry has been debating, for many years. I think since the inception of modern Islamic finance in the last few decades. And that is the unique value proposition that Islamic finance offers vis-a-vis the conventional finance industry, right? You are the head of, the Islamic practice for one of the largest banks in the region, the largest financial institution in the UAE, and your parent company is a conventional bank, but you have a very strong and thriving Islamic finance business that is unique to many of your customers, to many of your clients, and they opt for that. So if we can start with that, and I think the audience would love to hear your insights on this, what is the unique proposition that Islamic finance offers, which truly distinguishes it from what the conventional side of the industry does?
Thank you very much, Mustafa, and thank you very much to Refinitiv for having me as well as FAB Siraj here today.
It's our pleasure.
I think, it's a very good question, and I think perhaps I should start by sharing a bit on the key challenges that the industry is facing today. Firstly, if you basically look at the level of penetration that the industry is having today from a markets and geographical perspective, you see various degrees of success rates. For example, if you look at Saudi is at 75% penetration rate. If you look at the market more from an Islamic asset base against a total banking asset base. If you look at UAE today, UAE is at 21%. Bahrain is at about 28-29%. Kuwait is at about 50%. And Malaysia is hovering at about 28-29%. So there are various degrees of penetration across different jurisdictions and geographies. And if you look at segment-wise, be it microfinance, be it SME, be it trade finance, capital markets, for example, again, there are various degrees of penetration and success rates, as well as growth rates in different markets and jurisdictions as well. If you look at the industry from a product suite or product proposition perspective, obviously, it's still work in progress. Although there's been a lot of, I would say, achievements and success which the industry has actually achieved over the last 10 to 15 years. So there are still areas where I believe the industry can actually improvise and enhance, particularly from an end-to-end sort of proposition perspective. If you look at products such as trade finance, such as capital markets, for example, Islamic capital markets, obviously, I believe there are various rooms for us to enhance in terms of improvising the product proposition vis-a-vis the conventional counterpart. Because I believe if we're able to do this, there's a huge wallet share for the Islamic industry to tap on moving forward. Lastly, from a regulatory and legal perspective, if you look at the conventional business, given the historical scale and size, especially from a business, perspective, the legal and regulatory framework from the conventional space is well ahead. Particularly if you look at it from a dispute resolution perspective, litigation perspective, and the proper regulatory perspective as well. So it's more established and I would say more ahead compared to Islamic. So there's room to improvise as well. But having said that, there are strong efforts and initiatives which are taking place right now by the Islamic industry players, which includes the IFIs, which includes the regulators, includes standard setting bodies, to actually close the gap, and bring the industry forward. So you are seeing a lot of efforts that are taking place, in the industry at this point in time by, for example, standard setting bodies such as IFSB, such as AOFI, such as IFM, to ensure that the industry can move forward and become more competitive, more resilient, and at the same time more efficient as we speak.
I think you touched upon some very interesting points there, and I'm going to come back to the point on regulation, then I'm going to come back to the point on the standard setting bodies. But I want to start with the first thing that you said. And if we look at the industry across different markets, you have to break it down by customer segments, right? Yeah. On the retail front, you mentioned product development. We have a relatively decent suite of products that are available. But when it comes to project finance, when it comes to infrastructure finance, when it comes to targeting SMEs and corporates, this is really where the innovation on the product development side is lacking. And what is being done to harness that? Because you mentioned Saudi Arabia, 75% penetration, which is very impressive, far above many other markets. But that's primarily driven by the retail segment, right? And even in other markets, I know that Malaysia is a little bit advanced in tapping into corporates, tapping into SMEs, but there's still a lot of room for improvement. So how do you see that developing going forward?
Yeah, this is where I believe there needs to be a concerted effort by all the industry players, to bring the industry forward. I think one of the key, I would say, challenge within the industry over the last 10 to 15 years is if you look at the way the Islamic financial institutions look at competition, they tend to basically compete amongst themselves within the same market space or within the same industry space. So I think we need to actually get out of that particular mindset or box. We need to look at the larger industry, which includes the conventional players and other players as our competitors, and set that benchmark so that we can actually be able to become more competitive with the larger market space, not just within the Islamic space. So for us to actually move forward, right, we need to actually look at not just the Islamic banks or Islamic financial institutions or our peers, but we also need to look at our conventional peers, as a benchmark. Once we're able to look at the conventional peers and the larger market space as a benchmark, right, be it from an angle of technology or digitization or product proposition, right, we are then able to set a proper benchmark for the industry or goals or objective for industry to move forward to and become more competitive moving forward. I mean, we are all aware that this is industry which has just started, over the last 40 years ago, right? So if you look at the conventional space, conventional banks have been in existence for the last maybe 1,500 years, right? So the Islamic banking industry has only come into existence, I would say, in a more formal, institutionalized, I would say, platform over the last 40 years. Right. So obviously, if you look at what we've achieved over the last 40 years, it's been quite an achievement. But what we need to do now is we need to move forward and look at the entire market space and the conventional space as the benchmark. So it needs a lot of concerted efforts. So as I mentioned just now, we need to work alongside the regulators, we need to work alongside the standard setting bodies, we need to work alongside our peers as well to see what do we need to do now to basically have a more sort of comprehensive end-to-end product proposition across every single product segment.
Yes. And I think it's very good you touched upon the regulators, because that's another area that I want to come into, right? I think you very rightly mentioned that the regulations that are there have been geared towards the conventional side and have supported the conventional. We've seen in some markets like Malaysia, like Bahrain, the government tried to take a proactive role in promoting the Islamic finance side of the business, right? In other markets such as Saudi Arabia, they've taken a very neutral role, but through other factors it's been driven up. And I think UAE falls somewhere in the middle in that equation, right? How critical is the role of regulators in promoting? Because obviously the conventional banking industry has had regulations that are tailored to the industry, and it seems to be that for the Islamic, it's a makeshift transition of those regulations into the Islamic side without really tackling the core of the Islamic finance, which is around propositions of profit and risk sharing and other elements like that.
Very good question, actually. Now, we have seen different models in different jurisdictions. For example, if we look at the Malaysian model and the Bahrain model, for example, it is pretty much driven by the government and the regulators. Yes. So the government and the regulators would set the goals in terms of what they want to achieve for the Islamic finance industry, and they then gather the whole industry to work together to achieve that goal, right? So it's more of a top-down approach. So if you look at markets like Saudi, it's basically very much market-driven, right? So based on traditions, based on I would say social values, based on faith, the Islamic industry in Saudi actually has grown to a level where it's at 75% today. Yeah. So it's very much, I would say, self-driven, given those attributes. If you look at UAE, I think UAE is actually going through a transformation at this point in time. So the market is becoming more and more regulated compared to before. And I believe the regulator is actually taking the positive step moving forward, by ensuring that, the market is more sort of uniform, more regulated, and more structured, across the board. So I think, UAE is going through, a very, very positive phase at this point in time, with all these regulations being introduced to ensure that the industry is moving into the right direction. Go ahead.
And one of the recent announcements is the introduction of IOFI standards.
Yes.
for Islamic banks in UAE. What do you think will be the impact of that? And do you think that is a step in the right direction, and they need to do more to align with bodies like IFSB and others that are promoting international standards in Islamic finance?
That's a very good question, Mustafa. I think one of the biggest challenge that the industry is facing globally is standardization.
Yes.
Yeah. Now, people kept talking about the universal acceptance and passportability of Islamic products and solutions, right? Which at this point in time, is still going through, I would say, a challenging phase, right? Given that standardization is happening, right? But it could be better in terms of getting towards ensuring that the industry is fully standardized, be it product, be it Sharia. The good news is that I think there's a strong push across all the stakeholders to ensure that this takes place as soon as possible. So again, I think the step which has been taken by the UAE Central Bank recently, by enforcing all Islamic financial institutions to follow the AOFI standard beginning 1st of September 2018, moving forward, is a positive step, and I think it's going to be a game changer in terms of ensuring that the industry is standardized, not just in UAE, but also across the globe, with all the regulators also coming in and adopting the same approach as well.
Yeah, and from that perspective, do you think that these international standard setting bodies are doing enough now to address the challenges of the industry going forward? So there was this very strong momentum in the late 90s and early 2000s about developing standards, addressing the issues, filling the gap that was left in the industry. But the momentum kind of waned a little bit, I think, in the early 2010s. And so do you think that the standard setting bodies are now waking up again to try to push new standards and new regulations for the diverging challenges that we face today, particularly in areas like project finance, infrastructure finance, and these elements that the industry has always not fully been able to tackle or capitalize?
Yeah, I think, in my opinion, a lot of efforts have been done by the standard setting bodies, to bring the industry to where we are today. Especially if you compare, where Islamic finance was, maybe 20 years ago. Right, but obviously there's always room for improvement, and I think that the responsibility and accountability towards this, it doesn't just lie with the standard setting bodies, but it lies with the entire industry. The IFIs, the regulators, government sponsored bodies, as well as the standard setting bodies. So it needs to be a concerted effort. Right. So I think what's perhaps lacking at this point in time is awareness. Right? As the industry grows, and given that the focus, is, or the priority by the industry players is more on growing the industry. Perhaps this has not really been on top of the agenda. So I think we need to place this as at the top of our agenda to ensure that this agenda of standardization is achieved with the contribution as well as the, I would say, the inclusion of the entire industry.
Yes, completely agree. And I think that we're moving in that direction now.
We are moving in that direction, inshallah.
The other major, trend that is looming over the entire financial service industry, not just Islamic finance, is the advent of FinTech, right? And, people are talking about banking 4.0, and people are talking about, completely going back to first principles, analysis of how banking should be done, leveraging technology and so on. And, obviously this is a challenge for the entire industry, but it also poses a unique challenge for Islamic finance, because Islamic finance at its core principles was something that people felt could not be achieved, a pure profit and loss sharing model or a pure, business participative model. But now with the advent of things like, blockchain, AI, transparency of information and so on, people are seeing, new startups that are coming that are much more aligned to the principles of Islamic finance. How do you think FinTech will impact, one, the larger players, from a disruptive point of view, but also from a point of view where they proactively embrace technology to go back to the principles of Islamic finance?
This is a very popular question, because this question keeps on popping up in every single conferences, events, discussions and whatnot. I believe FinTech is going to be a game changer moving forward, especially for the Islamic finance industry. Given the fact that, number one, I believe the Islamic finance industry is actually facing a particular challenge with reach and coverage. So if you look at Islamic finance today, or the industry today, apart from the GCC and Southeast Asia, the ability to offer Islamic products outside of these two main traditional Islamic markets is actually quite limited. So, for example, there are pockets of Muslims living in Europe, in the UK, in France, in Switzerland, in Germany, in Spain. There are pockets of Muslims in in South America. There are pockets of Muslims in Asia, South China, in India. India has got a few 100 million Muslims, right? And India, perhaps by the year 2040, may have the largest Muslim population in the world, overtaking Indonesia. And even if you look at Indonesia as the largest Muslim populated country in the world, with 10,000 islands, financial inclusion from an Islamic banking perspective is still a challenge.
Major challenge, yes.
Yeah. So FinTech can be a game changer in this regard. The other piece which is worth looking at as well is if you look at the Muslim population worldwide. Today there are about 2 billion Muslims. Yes. And if you look at this 2 billion number, more than 50% of these 2 billion Muslims are below the age of 24 years old. And in this particular segment, the mobile technology utilization is at 70%, right, amongst the Muslim youth, right? And this number or these statistics have been growing by 35% a year over the last 5 years. Wow. So that's how powerful what you call technology and how FinTech can basically again be a game changer, to facilitate financial inclusion across the Muslim world. So amongst the things that I think FinTech can really provide the benefits to the industry is a couple of things. Number one, as I mentioned just now, financial inclusion. Yes. Right? So by having this technology, we are able to basically offer Islamic offerings and products beyond the boundaries of these traditional Islamic markets. Yes. Right? So we are able to give accessibility to Islamic offerings in places where there are no brick and mortar banking infrastructure. Number two is in the form of digitizing Islamic offerings. Right? So once we are able to digitize Islamic offerings, right, we don't have to rely again on the brick and mortar infrastructure. Yes. Again, giving better accessibility to consumers outside of the traditional Islamic markets. The third important element that FinTech can actually benefit or provide benefit to the Islamic financial industry is in the form of the blockchain technology, particularly from an onboarding as well as using it as a de-risking tool. So today, if you go to a lot of functions or events or conferences, there'll be a lot of discussions on de-risking. Right? Yes. So blockchain can actually help the Islamic financial industry in terms of ensuring we're able to de-risk and create the transparency amongst all the stakeholders within a particular transaction. So blockchain again is powerful, for as a form of what you call encouraging and promoting Islamic financial the Islamic financial proposition towards a larger audience and within a properly a safe sort of environment and secure environment. The next piece, or the last piece is actually utilizing smart contracts. Again, in this digital world, smart contract is becoming more and more popular. So we are already seeing a lot of the simple bilateral sort of transactions being offered and utilizing smart contracts. And I think moving forward, there'll be more and more sort of sophisticated products which are going to also leverage on this smart contract. So again, there are a lot and loads of benefit that the industry can actually leverage from FinTech.
Yes, and I completely agree. And this is, these are the topics of discussions that are taking place, in many conferences all over the world. But do you see the industry taking a proactive step towards embracing that? Are you seeing financial institutions developing smart contracts or leveraging blockchain for de-risking or other, risk-related matters? Are you seeing governments leverage FinTech through financial institutions to promote financial inclusion? Because these are many of the challenges that many governments face around the world today, and Islamic banks can leverage that to address their own scale challenges as well. Do you see institutions on the ground?
Yes, I do see, and frankly, it is also happening at various degrees of, I would say, what do you call implementation. But one thing for sure is, the entire industry has recognized the fact that this is actually a huge game changer and needs to be leveraged on and exploited on to ensure that the industry can actually fully capitalize on the benefits of FinTech and digitization. This is something which I think the industry is embracing, and it is only going to get sort of more sort of intense in terms of the utilization and in terms of the promotion of this, not just by from an operational perspective or from product offering perspective, but you're also seeing it being embraced quite strongly from a consumer side as well. Yeah, so the demand is there, and I think all the industry players are quite well aware that if they do not do this right, and with the strong demand that's coming out from on the consumer side, they're just going to lose market share if they don't go along with with this particular strong initiative. Yeah,
no, I think very, very strong trends there. I think one of the final things that I want to ask you is one of the key hot topics within the industry and amongst governments as well, and that's around the alignment between Islamic finance and the Sustainable Development Goals. So that the Islamic Development Bank has really embraced the Sustainable Development Goals. They've used it to build their 10-year strategy, their 5-year strategic plan, and their framework for how they're going to leverage Islamic finance to help benefit the industry. And in many markets around the world, we see Islamic finance industry looking at the SDGs and seeing what kind of impact they can have in their own respective market societies. Can you please touch upon that and let us know how you, as an industry leader, how do you perceive the alignment between Islamic finance and the SDGs?
Now, if you look at the 17 points in the United Nations Development Programme, SDG goals, I would say, in all these 17 points are very well aligned and is pretty much a reflection of the Islamic traditions, I would say. And I call it Islamic traditions because it has been in existence for maybe 600 years ago or 700 years ago. Yeah. So, and if you look at the SDG within the Islamic banking space, I think you see that the goals such as eradicating poverty, goals such as ensuring we do not cause any harm to the environment, gender equality, and all this are already being practiced in the Islamic world or Islamic tradition, and it's a reflection of Islamic finance as well. Yeah, and if you look at this Islamic world, in Islamic tradition, tools such as social finance, right, are already being practiced in the form of zakat, in the form of sedekah, infaq, in the form of what you call waqf, right? These are all already in existence, in the Islamic tradition. So for me, SDGs is basically a reflection of what Islamic banking, Islamic finance, and Islamic tradition is all about. Yeah, and if you look at Islamic finance today and what has actually transpired, over the last 5 years, with IDB, as you mentioned, also taking the lead and working along UNDP, to roll out, quite a number of projects as well as initiatives, to ensure that these SDG goals are attained and is actually realized across the Islamic economies as well as Islamic finance industry. You are now seeing a lot of the Islamic financial institutions, right, placing themselves as a key stakeholder within the larger ecosystem. Yeah. So you are seeing now, for example, the last couple of years, the first green retail sukuk being issued out of Malaysia. You are seeing the first green sovereign sukuk issued out of Indonesia. And I believe sometime in September this year, in 2018, there was basically an SDG sukuk issued by a financial institution out of Malaysia, right? And there are various Islamic green funds which have also been issued and available out there today. So, as I mentioned again, and I would reiterate again, SDG is actually a reflection of the Islamic tradition, right? And it goes hand in hand, and it goes in a way where it basically complements each other. Yes. Yeah.
And hopefully we will see some of that impact as the industry goes forward. Mr. Shamzani, before we go, one final question. The industry, as you mentioned, in 40 years has grown tremendously, $2.4 trillion in assets. But if you look at it, some would argue that it's not a truly global industry yet, right? They're still concentrated in the GCC, concentrated in Southeast Asia, and total assets are about 1.5% of the total financial system, right? I mean, obviously a lot of progress so far, but as experts project, they're expecting the growth of the industry to slow down unless new markets start embracing it in the same manner. Where do you see, are you satisfied with where we are today? And where do you see the future of this industry growing? Is it going to remain a niche within the broader global industry, or can Islamic finance become truly a part of the mainstream financial services industry globally, not just concentrated in a few key markets?
Well, I see a huge potential for this industry to grow beyond the traditional Islamic markets. So you've already seen the trends of, for example, sukuks being issued out of non-traditional markets, out of the UK, out of Luxembourg, out of Hong Kong, out of Singapore, right? What the industry needs to do is to basically push forward and ensure that the awareness on Islamic finance continue to grow. And we need to actually go and break the barrier where there are limitations for us to grow as well across boundaries, across jurisdictions, across geographies. As I mentioned just now, we need to look at the entire market, banking market, as a benchmark, not just Islamic banking as a benchmark. Yes. We need to actually get out of that box. The moment we are out of that box, we are able to explore other markets beyond the traditional Islamic markets. So, in my opinion, right, if we actually look at the entire market globally as our market, with especially with One Belt One Road initiative coming into play, with loads of infrastructure funding requirements, across non-traditional Islamic markets, which are available out there, which the Islamic finance industry can go and tap into. So I believe we should actually look beyond the traditional Islamic market. There are loads of opportunities that are available, across the One Belt One Road initiative, for example, which cuts across a lot of non-traditional, non-Islamic markets as well. Yeah, and these are a potential which are available to Islamic finance. So it's all up to us to actually reach out, and move into these new frontiers, and spread, the coverage of Islamic finance beyond the traditional Islamic markets.
Very exciting times. Mr. Shamzani Hussain, head of FAB Siraj, thank you very much for being with us today and sharing your insights.